Hi guys, how are you? Welcome back. Welcome to Real Macroeconomics and Investing. Welcome to TradingView, YouTube, and my subscribers. How you guys doing? Wow, what a week, huh? Yeah, well, I've been warning for such a long time now. Caution, 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 caution. Well warranted. Um, this is a monthly chart of the Nasdaq, and let's assume that the market closed today. This is what it would look like. So even on a very long-term chart, this move has left a mark. It may not close here, and it'll, again, this is based on a monthly close, but it's left a mark. All right. Um, this is how do I say it? Deer in the headlights kind of move. Somebody in my chat said, this is screwed up because I can't buy and I can't short. Exactly. That's the problem. That's why you short when no one else is looking, right? When everybody's telling you, yeah, everything is great, don't worry about it. It'll always be great. When you start getting that, you get complacent. You don't assess risk, um, and when you're trying to do it after the market starts to tank, you end up in that situation, right? Too scared to buy, too late to short. Now what? And you're stuck. You're stuck in those positions. So that's why they say, it's better to be out of the market wishing you were in rather than being in the market wishing you were out. Um, but believe me, it's not an easy thing to try to short a market because you'll be wrong so many times that you just start doubting yourself, or you'll blow out your account or whatever the case may be. So here's my advice to you: don't try to pick bottoms. This is not the time to be doing that. Now, I understand that everybody on social media, that everybody is a stock expert now. Buy the dip. I'm a stock expert. Buy the dip. I wasn't alive in 2000, or toddler in 2008. Never seen a bear market, but buy the dip. I'm an expert guy. I'm going to tell you how it is, right? And this time may very well be the same. That you buy the dip, it goes higher, and Nick is wrong. That's fine. I don't have a crystal ball. But what I can tell you is I would not be bottom picking in this market. Now, having said that, there will be a ferocious move to the upside, possibly. Usually in bear markets, what happens is you get that ferocious bear market rally where everybody thinks they're missing out, the FOMO. They run in, they buy it, it corrects from some kind of structure, but doesn't really do what it's supposed to do. And then rolls over and boom, right back down. And then what? You were worse off than you were before because you chased it. Okay, remember, it's better to be out of the market wishing you were in than out of the market being, or in the market wishing you were out. So when you get these bear market rallies, instead of people getting out, what they do is they pile in more thinking that, oh, this is buy the dip. I know this one. And now they're more heavily invested, and the market tanks right back down. Okay, so you go from this comfort, yeah, buy the dip. Yeah, I'm an expert. I'll tell you how it is. Yeah. Oh, I've done this. I've been doing it for 10 years. Let me tell you about stocks. To, oh my God, what is it doing? I got a margin call. Shit. Oh, okay. That's the way it works. So even though we're not in a bear market, definition of bear market is more than 20%. The way the market is behaving is bearish. All right. Enough of that. So let's go back in time, see what's going on. Um, again, how would I do it? How would I apply the maximum amount of pain to the maximum amount of people? I would do it like this. Is it different this time? Maybe. Maybe it is. Maybe I'm wrong. But that's the way I would do it. I would sell, 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 and every single buy the dipper will blow themselves out, go out, put more money in the market, they'll start buying the dips again and blow themselves out. And once everybody hates stocks, then the market bottoms. Okay, that's the way I would do it. Maximum amount of pain to the maximum amount of people. Rip it down. Maybe it won't work like that. We'll see. All right. So PayPal, as we mentioned, this should resolve to the downside. It did. Dollar, the dollar, kind of funky, kind of action. You would think that raising rates would be bullish for the dollar. Then I thought about it some more, and I'm like, well, what if they don't raise rates or taper because they're not tapering fast enough or sufficiently? Is this dollar still going to go up? And I think the answer to that is no. I don't think that would happen. So we have to wait and see how they're going to raise rates, how fast they're going to raise rates, how much, and see how the dollar behaves. For right now, I would take this as a warning shot that they probably will not raise rates fast enough. Okay. And if they don't raise rates fast enough, then what ends up happening is the foreign dollars will not come back to the U.S. to push the price of the dollar up. Now, you would think that's a bad thing. I would tell you not necessarily, because a weaker dollar would make our goods and services cheaper, which means more jobs for us because our exports will become cheaper. So, double-edged sword, not very clear, but we'll see. We'll see. Dollar we talked about. All right, Shiba. I mean, how many times can I show this? Failure, 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 failure. Okay, it's failing. Trump, the Trump stock. I said if it breaks the uptrend line, take profits. It broke it. In fact, it went way above the 84%. It more than doubled since my call back here. Right, just to kind of give you November 23rd, I said buy the Trump stock, and sure enough, boom, more than doubled. All right, so another good call. It did break down. Take profits. Run, run, run. JetBlue, boom, straight down. Thank you very much. Another good call. Game, right? Well, what's there to say about this thing, right? Same thing with AMC. What's wrong with this picture, right? Look at this. Corporate profits are straight up. Deficits are straight up, but labor force participation is in the toilet. So if you don't have a job making money, how are you going to go out and consume? And if you don't consume, how are companies going to make profit? So what's wrong with this picture? This doesn't make sense at all. So we have less people working, and we have inflation, and somehow corporate profits during lockdowns went up. Okay, magic. I would tell you, I would caution that I don't know this to be true, but probably going to see corporate profits start to roll over here. Okay, probably start to roll over. Not good for stocks. Carnival, no surprise. Boom, broke down. 10-year, again, the 10-year depends how ferocious the market starts to fall. Um, it broke out, came back. I think it's building some kind of F flag here. Um, but again, if they start selling stocks relentlessly like they have been, then you're probably going to see that this will resolve to the downside. That this will be a false breakout, and this will start to fall back down. But you got to have a lot of selling in the stocks, right? So why do they do that? To reduce beta. Okay, they don't want to lose money, but they want to have some participation. You can't take $100 billion and go put it in an FDIC $200,000 bank account. That's not the way money managers work. So they got to put the money somewhere. It's not a whole lot of places you can put your money. So, um, that's why they go out and buy bonds. So anyway, forget about that. Hey, firm, let's go back to December 15th. I said, look, this is going to go lower. Boom. Thank you very much. Another good call. Right. I posted it again on January 18th. Boom. back down. AMC, what do you say about this thing? Disaster. Picture's worth 1,000 words. Now, again, this is important. Okay, purchasing power keeps falling as deficits keep rising. Now, again, I want to kind of be clear about this. The expansion of the money supply is okay, provided that there's goods and services that have increased as well, right? So if the productive output of an economy grows, so must the money supply. Okay, that's very important to understand. The loss of purchasing power comes when there's an excess amount of dollars being provided relative to the productive output of that economy. That's when the loss of purchasing power comes to be. So it's important to understand that. It's not that all deficits are bad. Okay, if your economy is, whatever, I don't know, $10 trillion and you grow to $12 trillion, well, of goods and services being produced, well, you got to increase by $2 trillion the money supply. Yeah. If you grow it to 14 trillion and you only got 12 trillion of GDP, well, you're going to lose purchasing power, and that's what's been happening. It's excessive deficits, right? All right, Nifty 50. I kind of front run this a little bit, all right, but given the state of what the message of the market is worldwide, I went ahead and said, this is a double top, textbook. Sure enough, it's resolved to the downside. Amazon, let's go back in time here. And I said, look, I'm not convinced. I'm not convinced this is a breakout. A lot of people are saying, oh, look, it's a breakout. And this is why I don't subscribe to the support and resistance stuff. It's going to take off. It broke the line. And I said, well, I'm not convinced. And sure enough, that was the right call. Now, again, I'm going to point out that I kind of front run this a little bit. Because the crossing of the line in of itself was not the problem. It's a 13-year channel, yes. Crossing of the line is not a problem. It's an area, right? What would cause concern is if you started breaking this area as well, which we did today, all right? And that's what I said in the comments below, okay? Crossing of the line is not the big deal, but if it starts crossing the other one, then it is a big deal. Now, for some reason, I don't know that it's glitched. I shorted it. Okay, so this should be green. I don't know why it's not green. Whatever. But this is a correct call, okay, to the short side. Infrastructure, okay, it's starting to break down. It's starting to break down. So building back better doesn't look very good. US dollar ruble, this is a key area that it's breaking. You can see the dollar really start to take off against the ruble. Geopolitical nonsense. Typically, oil high, good for the ruble, good for Russia. Not what's happening because, again, of the geopolitical nonsense. All right. So that's pretty much it for this video. Okay. Again, I'm going to say that the NASDAQ, if it were to close today on a monthly, it's left a mark. This move has really left a mark. Just to give you an idea how much of a mark it has left, this is COVID right here on a monthly. That's COVID right there. Okay. This is far worse. Almost. Okay. It looks far worse. Because I don't think this is going to stop going down. So, and it's kind of funny when you think about it that during a pandemic, lockdown, complete collapse of the global economy, that the stock market will only go down on a month-to-month close 14%. That doesn't even register in the head. And that's the problem with $8 trillion of deficits. Endless loans to everybody, right? Helicopter money, zero interest rate policy, ZIRP, QE, right? You're dumping all this money, you get what? Asset price inflation. And then you get real productive economy inflation. But that's not the problem. The problem is it's transitory. It's supply chain. Is the big pink elephant in the room. The $8 trillion is not. We're not going to talk about that. No, 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 no. We don't want to talk about that. It's supply chains. Let's blame it on that. It's it's mind blowing. It really is mind blowing how they fool people into, hey, look over here, don't look over there. But clearly, this move has been uh, something to marvel. So, all right, that's it for this video. Thank you guys. Thank you for your support. All right, I'll do my best to give you the best analysis I possibly can. Please don't bottom pick. Okay. Well, the cryptos. No, let's do cryptos real quick. Again, just as a reminder, okay, I took my profits and ran. When? December 28th, 2021. Right, no, sorry. No. November 30th, 2021. Okay, took my profits and ran right here. Okay, what's happened since? Glory. Glory. Yeah, it's completely collapsed. Completely collapsed. Yeah. So you look at all the calls I made on cryptos, false breakout, Shiba, You want to talk about Dogecoin? You want to talk about Tilray? Not Tilray. What's the other one called? I forgot them now. Anyway, it doesn't matter. Any crypto you look at, it's gotten, Solana has gotten destroyed. Everything has gotten destroyed. And that's the importance of understanding the message of the market, is doing all the analysis, not the analysis that you want to hear or your bias tells you to look at. So, I had a guy complain why I sold out. I should hold. Enough to make your hair, turn gray and start pulling it out. Why didn't you hold it if you believe in cryptos? Like, oh my God. Oh my God. All right. That's it. Take care, guys. Talk to you soon. Bye bye.